Hello, everyone. Today I'm joined by Andrea Hippeau, partner at the VC fund Lerer Hippeau. How are you doing today, Andrea?
Hey, Julian, I'm doing well. How are you?
Doing great. Where are you dialing in from today?
I am in our office in New York City.
Awesome. In simple words, can you describe to me what your role is at the fund and what Lerer is, what sort of investments you do, both in stage and sector?
Yeah, of course. So I'm a partner here. So I'm a member of the investment team. I've been here for 10 years, actually, since I got my MBA at Columbia. So started as a post-MBA associate with our fourth fund and now a partner with our eighth fund. So I've been here for the majority of my career. And in terms of what Lerer Hippeau does, it's fairly simple. We're seed stage investors. We're generalists. So for us, it's just about kind of identifying the best founders at the earliest stages. And we lead pre-seed and seed stage deals. We are very active. So we do like between 10 to 15 investments a year. And we're currently investing out of our eighth fund, which is a $145 million fund. So our check size is typically between $1 to $3 million. And we're looking to own 10% of a company. So we lead deals, we give term sheets. We also do convertible notes and safes, and then we co-invest with other people. So we typically take about half of the round. So let's say you're raising $2 million. We would take $1 million and then syndicate out the other $1 million to other folks in the ecosystem. And companies can be really, really early. So we invest in companies, it's just a person with an idea. Some might have a product that just went to market or about to go to market. Actually did our first investment this year into someone who didn't even have an idea yet, a former founder in our portfolio that we just knew we wanted to work with. It's a people business at the end of the day, and that's what I love about it.
Awesome. Thank you so much for that intro. I know the fund is fairly general from the overview of the entire range that you guys cover. You as a partner, do you cover a specific set of industries, or is everyone who works with all the investors who work within the fund fairly general from their interest standpoint?
Yeah, we all have things that we like. I can go more into me specifically, but we see like over 3,000 companies a year. It's kind of an all hands on deck approach. If we got too specialized as individuals, it would just be very hard to cover just the quantity of companies that we look at. But that being said, we all have types of companies that we've worked with or that we know more about. For myself specifically, I've done more in regulated industries. So I did some cannabis investments, construction, and aerospace, vertical SaaS, vertical marketplace, and deep tech as well. So drones, AI, robotics. And that really doesn't come out of anything in terms of my own background. It's just the types of companies that I've invested in over the years and have gotten expertise in, the types of founders I like to work with. But there are folks on the team that might like healthcare, and we know to send them healthcare related deals, consumer, know to send them more consumer type deals. Internally, I think that we all have our lanes and what we like, but definitely externally to the market, we're all generalists. And we have a very collaborative work approach with each other. So just because I like something doesn't mean another partner or another person on the team couldn't work with that company or source it and take the deal all the way through. It just means that we have a little bit more experience in a given space.
Kind of taking a double click onto this generalist model, there's a lot of VCs now who are specializing into deep tech, mobility, consumer, enterprise. What are the advantages you maybe see in terms of being a generalist? And if you had to push back and say, are there any downsides perhaps, what would those be?
Yeah, there's absolutely downsides. But the good parts is our tagline is we find founders before they're famous. Again, going back to the people-driven approach, we're just looking for exceptional founders. And I always tell founders, it kind of doesn't matter what you do in a way. I mean, of course it does, but what we're really investing in is a person or a group of people and how smart they are, their expertise, what they bring to the market, their competitive edge. Being able to kind of say, hey, it doesn't matter what sector you're in. You could be building a consumer product. You could be building a new generation of airplane. It doesn't really matter. We want to double click on you and work with you and support you and the team. And then, of course, we partner with folks on the cap table who can bring more of that industry knowledge. So it allows us to look at a lot of companies. Like I said, we can look at basically any pre-seed or seed stage company if they're US based. So that's great. And it allows us to just work with the people and not have to be so thesis driven. Because if you are a very thesis driven investor, there's lots of pros to that. But one of the cons is there's just not a large of a pool of founders that you can go after. And so you're kind of leaving a lot of the talent on the table, so to speak, in terms of who you can invest in. The downsides of being a generalist is that there's a lot that we don't know, and we are the first ones to admit that. And I think there are certain sectors that require a bit of expertise to really understand. It also means that it might take us a little bit longer to get up to speed on a company, although our process is very quick and and efficient, but there is a little bit of a learning curve for us if it's something that we haven't invested in before. And like I said, we do try to partner with folks that might have either built-in networks or a real expertise, but we're really relying on the founder really to be bringing that. And I think about, in my opinion, a successful startup is maybe 70% like all the same. And then the 30% is whatever kind of industry you're building in and your specific product and your specific go-to-market. 70% of it is just every startup has to scale and they're all going to hit different milestones, different pitfalls, different things to avoid, to lean into. And that's where we can really help. We're your general company building partner. We've been doing this for 14 years. We have 200 active companies. We've invested in over 400 companies. That pattern recognition and the data that we have over a really broad set of companies, I think is super helpful. In addition to, my favorite part about Lerer Hippeau is the community of founders. So, we have about 500 founders in the community. It's like the highest caliber group that you could imagine. And everyone's really open to working together and chatting and giving advice and getting together. And I think a lot of that just founder support. It doesn't really matter what you do. The founder journey is surprisingly similar for everyone.
Amazing. And a question that I have based on that is you've echoed throughout the short time we've had together, the importance of the founder and ultimately making your investment decision. You now have been at the fund for 8 years, and so you've had time to sort of build up maybe that muscle in terms of identifying what that good founder looks like. Could you maybe take me back early in your career and sort of what was that process like in terms of understanding who's a good founder, who's not a bad founder, but a not as good founder, let's say, and how much does data actually play a role in that in terms of maybe identifying certain traits, or is it really just that gut feel that you guys have that this person has what it takes to build a great business?
Totally. I think it's a muscle, basically. And the way to get good at it is a lot of reps. Whenever we hire a junior person or someone's like first time at a VC, I always just say, take every meeting. It doesn't matter if it sounds not interesting or completely ludicrous, but just take the meeting just to get the reps and meet the founders, the different types of founders and different styles. And really just through doing it a bunch of times, you start to kind of hone in on what we call your filter. And filters are going to be different for each fund because each fund looks for different things. And then it's also going to be different for each individual because as individuals, we come with our own biases and things that we want to see in a founder or don't want to see in a founder. So you really hone your own filter. I would say it's always a work in progress. So even though I've been here for 10 years, I'm continuing to hone my filter in terms of what I'm looking for. You definitely have to make some mistakes. I mean, there are some investments that I led early on that I look back and go, why did I do that? But you're dealing with the information that you have at the time. And one of the great things about VC and one of the issues with VC is the long time horizon. So you're working with a company over a very long period of time, which can be really rewarding, but also the feedback loop is really long. So you might not realize that there was something about that founder that was either a red flag or something that was really great about them until 5, 6, 7+ years later. So you just have to do it for a really long time. I think you have to want to be a career VC because this isn't something that you learn overnight. It takes years and years to get to that point.
I want to maybe kind of go off script a bit here and your questions or your answer maybe sort of prompt and think about, obviously every VC has their investment committee and sort of decides to go forward or not with an investment in a variety of different ways. And everyone has their own pro and cons. And so you're talking about how you make mistakes early in your career. Obviously, you sort of want to try and minimize those as much as possible by adding maybe friction into the deal process to get it done, approval internally. Could you maybe walk me through how you guys go about approving a deal to be done and make an investment, and sort of how do you maybe sort of eliminate some of those errors without putting too many brakes on it and preventing deals from getting done?
Yeah, absolutely. One thing I forgot to mention, and then I'll get to it, is you mentioned gut feel, and that made me think of this, is I really think that it's art, not science at the pre-seed and seed stage because, and obviously you need to do work. It's not like you get to just walk in the room and say, oh, I like this person, I'm going to give them $1 million. There's a lot of work that goes into it and validating the market, validating the problem, the solution, all of that. But I will say, I know now within the first 2 minutes of a meeting whether I want to back the founder or not, basically. Trying to talk myself out of it is the way it goes. And that's not in 100% of cases. Sometimes you meet someone you think is really great, and then it's like peeling back an onion. As you peel back the layers, you realize, okay, maybe there are holes in this. And then there's some cases where you're like on the fence about someone, and the more you peel back, the more interesting it gets. So it's not all one size fits all, but it is much more art than science. My husband, who works in a big financial institution, is horrified by our process versus his process, but we're really looking for talent. So it's almost more akin to like a talent scout than it is to an investor in some ways. But in terms of how our process works, so we have a collaborative approach. And again, every VC is different. Some VCs, everyone votes, and then you kind of go based on the number of votes. Some VCs, individual partners or people on the team can just lead deals and don't need buy-in from anyone. I would say we sit somewhere in the middle. So there'll be a partner who is leading a deal with another associate or analyst, and we take it to the group and we discuss. Our partner meetings on Tuesdays. I just got out of it, and we discuss companies every week. So I would say over a 2-3 week, again, these deals move quickly, and we're not talking about companies for months on end, but over a few weeks, you kind of familiarize the group with the company, get feedback from folks, potential next steps. We're very network driven with our approach. Again, being generalist investors, we really rely heavily on our network for feedback and expertise. And typically we'll say, hey, why don't we make these introductions? We try to make it as really a value add exercise for the founders where they're meeting people that are either potential customers or mentors or people in the industry that are going to be high value to them. I think most founders leave a Lerer Hippeau process with a really good feeling, whether we get to a yes or we get to a no, and we don't drag things out. We are consensus driven. So I would say you need maybe 2 or 3 either partners or managing partners to be bought in on the deal. But as an individual investor, you can pound the table for a deal. And maybe someone is not in favor, but we really trust each other and our instincts and the arguments that we make. And you can get deals done that way. Like, for example, I did a deal earlier this year, a very, very early pre-seed. I think I really wanted to back the team. Some people weren't as bought in on like the bigger vision of the company, but they said, okay, Andrea, you have high conviction here. We should do it. I love that about how the way that we work because it's both autonomous and collaborative at the same time.
Amazing. In terms of now maybe diving back into sort of like the investment areas that you cover in particular, you mentioned a couple sort of in the beginning of the call. What maybe drew you to those areas in the first place? Was it just a personal interest? You just kind of got like a track record of deals there going. Walk me through how you sort of ended up there. And is there anything that's super exciting about the space from a macro perspective that you think?
Yeah, I tend to kind of unsexy areas to a certain degree. And what I love about being a VC is how intellectually curious you get to be. And I love going on these pretty quick sprint deep dives on industries and different areas. For example, if I think about how I initially kind of got into the aerospace world, I did a pre-seed investment in a drone company that was doing aerial imaging, among other things, and spent the time really getting smart on that market. We did the investment. I worked with the founder, learned more. And then about 6 months later, I got sent a high altitude balloon company, which normally I would have said, oh my goodness, I know nothing about this. How am I ever going to get smart on it? But they also do aerial imaging as part of their business and remote sensing. So I could kind of piggyback off what I had learned with the drone company. And I was able to apply it to the balloon company, even though it seemed kind of random, so to speak, for me. I already had the knowledge. So just over time, you kind of get this knowledge base and you get to know different industries well. And it's also where your network lies because sourcing for us as VCs and specifically for Lerer Hippeau is very network driven. So as you kind of dive into certain industries, you start to build your network there. And then those people start sending you deals and then so on and so forth. So it's both like a knowledge plus network equals more deals sort of equation. But I really do look at everything and I have done everything. And again, that's what I like about this job is you need to be okay with a bit of whiplash where 1 minute you're meeting with like a skincare company and the next you're meeting with a cybersecurity company and so on and so forth. And no 2 days are ever the same. It's kind of a weird job in a lot of ways. But yeah, I just think wanting to go down these kind of rabbit holes and get really engrossed in a certain area for a short period of time is like what I love about the job. And I think that's how you can be a good generalist investor.
So it seems like it's sort of just areas that you naturally get excited about and find yourself like running to do the additional research.
It's like they're not exciting areas. So it's like, oh my God, Gen AI, this is so hot right now. It's more like, hey, let me look into the construction tech world and how general contractors and subcontractors interact with each other and how could there be more automation there. So on the surface, they're not exciting areas for me personally, like what I'm interested in, but they're really complex. And a lot of these industries have been around for a very long time and have like a set way of doing things that you have to learn about. So it's like the part that makes it exciting is how not exciting it is, if that makes sense.
Yeah, totally. I'm a big fan of data and developer tools, and a lot of my friends are like, what even is that?
Yeah, exactly. The more someone is looking at you with the question marks in their eye, the more I'm like, oh, maybe there's something here.
Yeah, it's more interesting and exciting. Picking on maybe one of your recent deals, I saw that I think one of your last ones was in a company called Blockchain, which does security, sort of the Web3 blockchain world, if we still want to use Web3 as a term. Maybe walk me through that deal and what in particular made you excited about it, gave you the conviction. I assume obviously the founder was amazing.
Yeah.
Anything else that jumped out to you? And if it's just the founder, we'd love to sort of hear a little bit more about what in particular excited you about them.
Totally. Yeah. Blockchain's a great one, actually. They just presented it in our partner meeting because they're raising their next round. So they're doing super well. Again, this is going to sound like I'm going to sound like a broken record, but yeah, it was very founder driven. Kind of an interesting story there. One of the co-founders is my neighbor. And I knew that he had sold a cybersecurity company and had an exit. I was kind of from the sidelines, friendly, keeping tabs on him, what he was going to do next. And then I kind of got wind that, I remember it was actually at a kid's Halloween party. He said he was starting something new and I jumped on it. So kind of like a personal connection there, but that's also how these things happen. And he had teamed up with Andrew Howard, who was a more traditional cybersecurity executive. He was a CTO and then CEO of a large Web2 cybersecurity company. And the interesting kind of insight that they had is that at Andrew's company, they were getting these requests to do these audits for crypto. And that was a very growing part of their business. I think it went from 0 to 30% of their revenue in just a year or so. But it was a very manual process. And they were building some tech internally, but there was no platform there. And Aiden Kehoe, the other co-founder, a company called Scout Cybersecurity that he sold to Barracuda, that was helping SMBs. They had this Web 2 kind of lens that they could apply to Web 3. And they actually started thinking they were going to target more Web 3 developers and the application layer. And then now they have pivoted to regulatory finance space. They have iterated and pivoted since we led their pre-seed. But that's what is the beauty of investing in people that you are great people, is that they're able to navigate that pretty seamlessly and test and iterate and kill things quickly and lean into ideas and build a great team. And that's certainly what Blockchain has done. And then we also have some crypto companies in the portfolio, probably Blockdaemon being our largest one. So we were able to kind of validate it with them, again, with this network-driven approach. And we actually did the deal at when FTX was collapsing. It was a time where people were like, why are you investing in a crypto-related company? But again, being such early-stage investors, we don't have to worry about macro things like that. Obviously, if a whole industry is going to go under, but we knew that it wasn't going to. And we were able to kind of back them at that time when a lot of others were kind of trying not to. And that's where you can kind of get the best investments.
Totally. And I think one question that I have now is, you've gone through the deal process, is ultimately, what does the diligence phase look like? Is there sort of more diving into trying to understand the market, or sort of once you kind of have a read on the founder, to your point, it doesn't really matter what the market looks like because it's just going to change in the future? Anything in specific about that? And then my next follow-up question, in case you want to weave it in there, is I know you do I've done a couple investments in sort of the sustainability world.
Yeah.
So kind of curious whether that also impacts the way you think about diligence and whether there's any criteria additionally that you consider there.
Yeah, diligence, it depends company by company. If it's a space that we know super well, we have other investments, someone has spent a lot of time, then we don't have to do as much on the market side and can kind of just really get into vetting the founder and their specific approach to a market. Companies tend to, and I don't know why this is, I've always been curious, pop up in batches. So all of a sudden you'll see 4 or 5 or maybe even more of kind of more or less the same companies. It's nice because then you can kind of just do a sprint on that specific space and try to pick which one you think is the team you think is the best. I've always wondered if people all wake up at the same day with the same idea or read some TechCrunch article and decide to start the same company. I don't know. So yeah, we get feedback from our network. So that can be other founders in our portfolio typically are involved in that, which is actually great for us because then they can kind of pitch the founder on Lerer Hippeau a little bit subtly too. And then we have a lot of, outside of just our portfolio, a pretty large network across all different industries of experts that we can kind of rely on. We don't do any paid expert networks or GLG or anything like that. I think for the stage of companies that we're investing in, it just isn't as applicable. So there is sometimes when you're on LinkedIn being like, who do I know in this specific space? How could I get in touch with this person? But 9.5 times out of 10, we can figure it out. But I think one thing that we're trying to lean more into, and the market, the VC market in general, which I'm happy to talk to if you want to, is a bit schizophrenic at the moment. We were in this really slow kind of downturn period. Now everything is back to moving super quickly at really high valuation. So we really are trying to lean in more to the people. And taking that gut feeling that you get with someone in that first meeting and working really quickly to validate it without spending too much time. And some of this feedback can take weeks to get because someone has to meet the company and all that scheduling can take a long time. So what can we do to just quickly validate something and quickly validate the person and lean into that versus like having to check a million boxes to get something across the line? Oh, and the sustainability thing. So yeah, we have a lot of future of energy tech type companies in the portfolio. I will say that's not because we have some sort of sustainability mandate, but because we think that those companies are super interesting. And when you think about what we do and the time horizons, where are we going to be with sustainability and energy in the next 10 years? We just want to invest behind that. And I think there's a lot of exciting companies to be built there. It's something that we've done a lot in this last fund that we'll continue to do a lot of. But no, we don't have like a mandate of like, hey, that's the next number. Yeah. And the truth is like, you never want to invest that way because it's just not organic. And then you're kind of searching for something that may not exist and trying to make something work. When the deals that happen, any deal that we lead, it happens so naturally. Anytime you feel like you're forcing it, there's probably an issue. And these are really long-term relationships. I always tell founders, it's easier to get out of a marriage to get rid of an investor. It really is. There's a clear process to get divorced. There's not a clear process to get divorced with an investor and vice versa. And you just really want to work together for the next X number of years. And if you're trying to make something like fit in a certain box that it doesn't really fit, then the working relationship going forward is just, it's not going to be what it needs to be.
Yeah. That's exciting though, that like the sustainability investments are sort of standing on their own.
Oh, absolutely. Absolutely. Yeah.
That probably was not the case, I feel like 10, 20 years ago. So it's like cool to see that the space is maturing a lot.
Yeah, and there's so many low CapEx approaches to sustainability now. I mean, it's not like you need to go build a solar field anymore. Like, especially with AI, there's so many things you can do with the grid, with clean energy that are just these really light CapEx models, which are perfect for us.
In terms of closing the deal, a lot of people say that VC is one of the hardest things to sell because you're ultimately selling dollars and everyone's dollars are just as green as yours. Could you walk me through why you guys in particular win deals? Like, do you think about it if it's especially competitive process makes Lerer Hippeau stand out?
I actually just met with a founder yesterday where I could tell it was going to be a competitive process and I had to really pitch us. So this is top of mind. There's a few things. I think we've been doing this for a really long time and there's a lot of new capital in the market and there are a lot of really amazing emerging managers. And we have a whole community here in New York that we foster of emerging managers. So we're very supportive of the ecosystem. But I do think there's this idea of kind of more long-term capital and we're like the steady Eddie. We've been around for 14 years. We're going to be around for the next 14 years. And I think for founders, there's something comforting about that. And the fact that we really have seen it all. There's crazy stories, the good, the bad, the ugly. You really can't surprise us with an issue that you have in your company. And a lot of us are former operators or have just been doing this for a really long time. And we know the moments to be there for a founder. So there are a lot of investors who are going to be kind of breathing down your neck. Like, what's the update? Where are you on revenue? Blah, 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 blah. That's not us. We are in very, very close contact with our companies. Like, I'm texting with 3 or 4 founders right now, basically. So it's not that we don't talk to our founders. It's just that we let them operate because we trust the people that we backed. And we don't need to run your company for you. That's your job. And our job is to be there for the big inflection points. And so that's when we really lean in. So I think that really resonates with founders. And just this idea of being like this general company builder and that we can help you with all the mundane startup issues, things that you're going to have to deal with so that you can focus on what it is that makes your company special. And then the second thing I think is really, in a lot of cases, way more important than us is the community of founders. So the idea that you get this instant access to over 400 really high caliber founders. And some people are looking at that as like a potential sales pipeline. So, we want to sell into the space and people are really open to that. Or support and kind of mentorship is another angle, partnerships, just someone to kind of knock ideas around with, whatever it may be. And you get that. It's similar to an accelerator in a lot of ways with experience. I think that founders get through an accelerator, but it's there permanently. And it's a super curated group because it's all people that we've invested in. And then we also have a really superb platform team. So we have 3 folks internally that support the portfolio and they do a really great job for our portfolio companies. But at the end of the day, I do think it comes down to the relationship between the founder and the investment professional doing the investment. And in a competitive deal, you need that founder to want to work with you because they're going to have lots of options. In our case, specifically, normally higher priced options in terms of valuation because we never win on valuation. So again, it's about creating that rapport, that trust, that relationship with the founder really, really early on so that when they're thinking about how they want their round to look, like you're front and center in their mind.
Do you guys also ever do follow-on investments? I know you're focused on the pre-seed and seed stage, but is there an expectation that you're going to follow on later rounds?
Yeah, absolutely. So we reserve dollar for dollar. So that means if we invest $1 million in a company, we reserve another $1 million for follow-on out of our seed fund. So that means typically if we do a pre-seed, then we are doing your seed and your Series A out of the seed fund. And then we have 4 opportunity funds as well called Lerer Hippeau Select, and that's to double down on the Series B and beyond in our best portfolio companies. So it is a separate vehicle. It's outside of the seed fund for now. So yeah, we really start with a company as early as the pre-seed and in the best situations, follow on with them almost to pre-IPO. I also think that's another benefit of working with us. And it's great because, well, for us, just the business model is that we need a certain amount of ownership to make the returns make sense. But it also means that you get to continue to support the founders as they grow, which is really nice to be able to do that.
Yeah. And then changing gears again, sort of like the final set of more detailed questions that I want to ask you is around sort of your role as an investor sitting on boards. I think a lot of people take this in different directions in terms of your involvement, how much impact you want to have on decision making. Curious to sort of see how you think about it. What is your role as an investor sitting on a board, and where do you think you sort of add the most value?
Yeah, we have like a love-hate relationship with boards, I would say. And I would say our thinking is constantly changing and evolving there. So when we first started Lerer Hippeau, predating me even, we didn't take board seats. We used to do between 100 and 500K investments into companies, and it just didn't make sense. As we got more institutionalized and started writing larger checks and leading rounds, and as seed rounds particularly started becoming more institutional, meaning that a company had more traction when we were investing than in the past, the benefit of the board started to kind of make sense. And I always tell founders that it's not about the actual meeting itself, which I would say that you can probably poll founders, and I would say 80% of them say board meetings are not that valuable for them, but it is about the process of putting together the materials, of sitting down and taking that time, which founders' time is their biggest asset, so it's really hard to carve that time out for yourself, and thinking about, okay, what happened last quarter? What was good? What was bad? What did we accomplish? Where did we fall short? What are we want to do for next quarter? And I just think that formal process is so valuable for a founder, way more than any specific piece of input that they're going to get in a board meeting. I see as my role is really helping them with that process of being thoughtful about that. And then in the meeting, it's about obviously, and also this seems obvious, but it's not to everyone, actually reading the materials before the meeting, because there's a lot of investors that show up for board meetings and haven't read the materials, and that's just really frustrating. And so having read them ahead of time and be able to like really dive into the strategic questions and just be there to support them and help them think through things. And then I do think it's great to start that early, because once you get to the Series A, those investors are real board members, like they're professional board members. And if you've never run a board meeting before and all of a sudden you have a Series A investor, then you have to do your first board meeting with them. It's a steep learning curve. So if you just get that muscle going early on, it'll make your transition to kind of later stage investors much easier as well.
Yeah, it definitely seems like a very sort of nebulous role and hard to balance in terms of being too involved, not involved enough. So interesting to sort of hear your thoughts on it. Moving over towards our closing thoughts, we always try to end with a little bit of career advice and just advice in general, given we are an MBA podcast.
Yeah.
VC is notoriously difficult to break into. Yes. What would you recommend to an MBA student who's looking to whether either intern in VC or end up there full time, either after business school or sometimes after that?
Yeah, I would say just don't give up. I remember when I was an MBA, there were maybe 20 of us. It was not as many people wanted to go back. It was just 10 years ago. So still, and at Columbia too, which is, well, Wharton too, but real finance kind of MBAs. Yeah. There were probably 20 of us that, let's just say for round numbers, that wanted to be VCs. And I would say 3 of us ended up in VC jobs. And that wasn't because the 3 of us were better than everyone else. It was because everyone else kind of was, oh, well, I got this offer, this banking offer, or I got this consulting offer, and I probably would have done it too. It's hard to wait it out with kind of the unknown. But if you really really want to work in VC, I think just like as much as you can kind of try to stick it out. And I know financially that doesn't often make sense, but you will be able to find a job. It's just going to take a lot more time. And the best way to get a VC job is to kind of start doing the job ahead of time in one way or another. So obviously there's a lot of angel investors turned VCs. Not everyone can do angel investing, but if you do angel investing or you are able to do angel investing, that's a really great way. Another way is if you're at Wharton, for example, like you all are, who's starting companies out of your class or at Wharton and trying to find the VCs either cold or through your network that might be interested in those companies. Because as VCs, like we all live and die on deal flow. And if you are sending us high quality deal flow, you're going to be top of mind. So I would say as much as you can start doing the job before you're actually doing the job and showing that you know how to source high quality companies, that's how you're going to get attention from VCs. And we hired an analyst right out of undergrad, and he was sending us companies, really good companies that he was just finding on LinkedIn, or I always call him like a keyboard ninja. And that definitely set him apart from the other candidates. And then the right amount, the cadence of checking in with someone. You don't want, again, this is almost similar to being a VC and a founder. Like you don't want to be asking a VC every week, like, hey, do you want to get coffee or do you have 15 minutes to chat? Just send me a deal or two. And it doesn't even, might not be things probably I'm not going to invest in, but at least I know that you know how to source a company and what it looks like. And then especially for MBA, where as a post-MBA associate or whatever role you're going to come into, that is going to be the expectation.
And then what is one piece of advice or the best piece of advice you received, VC or not VC related, just life advice?
Oh, yes. I always give this one, which was from Kenny Lerer, who's one of our founders and managing partners here. He, way before I worked at Lerer Hippeau, at my first job out of college, he was trying to help me find a job. And I remember I was in J. Crew when he called me to check in, and I had gotten this sales job at Thomson Reuters, and I needed to go buy all new clothes basically for it. And so he was like, hey, what are you doing? I was like, I'm at J. Crew. I'm trying to get my work clothes. And he was like, that's fine, but this job is never going to work for you. And I was like, what? He was like, if you have to buy a new wardrobe for a job, it's not the right fit for you. And it seemed like such a little aside at the time. But I think as my career has gone on, now I wear jeans to work. But it's more to do with who you are as a person and how fulfilled you're going to be by a job. And most likely if you're having to change your whole entire persona to do that job, it's probably not the best fit. That always has stuck with me.
That's good. I was debating whether I wanted to go into banking, and that would have necessitated a full wardrobe change. So
yeah, exactly. I guess with COVID and Zoom, maybe that's not as relative. But yeah, I definitely, because my next job, I was a associate / assistant / everything at a family office that had just started. And that's when I first met with founders. And I was like, oh my God, these people wear jeans, A. And B, I was like, they're so passionate about what they do versus like my sales job, where actually I liked that job a lot, but no one was passionate about selling market data there. It was just like wardrobe kind of was indicative of the lifestyle and the type of people.
The vibe. Totally.
Yeah, exactly. Yeah.
That's a great piece of advice to end on. Thank you so much again for your time, Andrea.
Yeah,
I absolutely love this episode. So thank you so much.
Yeah, thanks.